There's a lot of ways to beat the crypto market. I personally like to look at data because then we can potentially draw conclusions from the past to the future. Let's have a look at a few charts most people are not considering. Let's try to answer the question if we are still in a bull market or have we seen a drawdown that's rather atypical for bull markets. What we've got over here is the Bitcoin price since beginning of 2023, and we see the maximum drawdown from the prior highs indicated at the top in black. We are currently at minus 22.8% from the high, which is one of the largest corrections we have seen in a while. Now, back in the days, I made an analysis on the stock market and I wanted to find out, is there maybe some kind of connection between past returns and future returns? Because there is this typical disclaimer, right? When you buy a fund, there's always this little writing at the bottom that says prior returns do not indicate future returns, but actually we can run the numbers. I made a correlation analysis between, is there a connection between past returns and future returns? Because let's say we look at the returns 1 week ago, is there a correlation with the returns 1 week in the future? Or let's say 1 month ago, is there a connection between the returns 1 month in the future? Is there some kind of time frame where past returns do have some correlation with future returns? The answer for the stock market is that there is no real correlation when we look at the positive case. So let's say there was positive returns in the last month. There is not necessarily positive returns in the next month, but there was one correlation that was pretty strong, and that was an inverse correlation. And that was true for the last 2 years. In other words, when there was negative performance in the last 2 years, there was a very high likelihood that we'd get positive returns in the next 2 years. So it doesn't work on a daily time frame, it doesn't work on a monthly time frame, but over the longer term, right? Over 2 years, if we had seen a crash 2 years ago, that's a very good time to buy. And I measured this for stocks, and it's true for stocks. It's probably true for the crypto market as well. If there was negative performance in the last 1 to 2 years, it's probably a good time to buy. This is currently, of course, not the case. What we're seeing in this chart is rather short term. And so just because we are down 22.8% does not necessarily mean that we are turning around. If we were down by 50, 60, 70%, and if that underperformance happened over the course of 1 to 2 years, then this is a very different story. Now, the crypto market and Bitcoin especially is very hard to value, right? When you have a stock, you can value the stock by the estimated future cash flows, by how much the company is going to generate in profit. When you buy a house, you can do something similar. You can estimate how much rent income and are going to get. With Bitcoin, you don't have anything like this, right? With Bitcoin, I believe the best metric to figure out, are we currently very expensive? Are we currently very cheap? Is to look at psychology. Is the market as a whole currently in losses or in profit? And that's especially useful when we look at the unrealized loss. In other words, when people are in very large unrealized losses, for example, here in the 2018 capitulation down to 3.5K for Bitcoin, when there's a lot of unrealized loss, people are not necessarily going to sell, right? They simply just keep holding for the next all-time high. And that's then potentially a good time to buy. That worked in 2018. It also worked in 2015. It also worked in 2023. Currently, again, we are of course very far away from that. And so have a look at this. This is the unrealized profit divided by the unrealized loss. And the bottoms do align quite nicely, right? So those are pretty good buying signals. The tops, however, do not align very nicely. In other words, if you had sold over here with those multiple peaks within 2017, you would have taken profit way too early, because Bitcoin at the time moved from $1,000 all the way to $20,000. So when people are at massive losses, they are less likely to sell and realize those losses. So that's a good buying opportunity. When people are in profit though, they might continue holding and more people might jump on. So it's not necessarily always good to take profit just because you see green in your portfolio. It's better to look at other metrics. When you're in the red and you hold Bitcoin, just continue holding. When you're in the green, don't necessarily take profit instantly. Now let's have a look at the bottoms again, and let's try to figure out when can we fish for potential bottoms. There's two ways to do this. We can look at the short-term holders and at the long-term holders. I personally prefer the long-term holder chart, and I'll show you why. This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out. Let's start off with the short-term holders. So this is the short-term holder market value to realized value. So where's the current price standing relative to the average cost basis of the short-term holder? So when this is below 1, that means that the short-term holders are in losses. When this is above 1, this means that the short-term holders are in profit. And we can see when you're just buying, when the short-term holders are in losses, you really have to look for quick exit opportunities. Because if the overarching trend is bearish, for example over here, and you fish this bottom and you do not exit over here, then you can end up falling more than 50%. So it's very, very important that when we are just looking at short-term holder depressions, that the exit is found very quickly as well. You do not want to turn a short-term speculation into a long-term investment. It's better to commit to the time frame in advance. So if you're trading short-term, exit very quickly. If you're trading long-term, feel free to hold long-term, but don't turn something that you initially thought is just a short-term bet into something long-term, because then you can get wrecked very quickly. Right? Have a look at this, for example. Let's say you bought over here at the beginning of January 2022 because the short-term holders were in massive losses. You got one exit opportunity over here, right? This is where we hit neutral in the short-term holders. But if you did not take that opportunity to exit quickly, then you would have gotten wrecked subsequently. So it's not easy to play the short-term holder game. I think it's much easier to play the long-term holder game. This is the average cost basis of the long-term holders. So whenever we are depressed, whenever the price is below the average cost basis of the long-term holders, it's a very, very good time to buy. Unfortunately, those opportunities don't happen that often, maybe every 1 to 2 years. Currently, that average cost basis of the long-term holders, it's at the current price, $24,379. So very far from the current price, but maybe at some point we might reach that average long-term holder cost basis again. Maybe not the 24K, but the cost basis is increasing over time, and we simply have to continue monitoring this. This comes from the website checkonchain.com, but of course I will also make an update video on this channel once that happens. So if you don't want to miss that, feel free to subscribe. Now I want to talk about realized losses versus realized profit. So that's a comparison of those two charts here. Have a look at how well spikes in the realized profit align with an end of a bull run. So this was a very good selling opportunity right after we moved from 5K all the way. Yes, we did move to 60K subsequently, but still you timed it relatively well, exiting over here. And most of the gains actually in 2021 had been made in the altcoins and not in Bitcoin. So it was good to sell Bitcoin over here and to simply rotate into the alts. Now we had a very similar Bitcoin sales event in March of this year, and I also sold a lot of my Bitcoin exactly one day after that high. This time though, people are not rotating into altcoins just yet, and that's probably because Bitcoin hasn't really rallied that much and it's still close to the 2021 highs. And so those peaks in the realized profit are very good potential selling opportunities. Now the same cannot be said for the realized losses. Just because this is spiking does not mean we have a very good buying opportunity. We might be buying over here, but we have to then sell subsequently over here. But there wasn't too much realized profit at the time, so it's very hard to sell at that point. So you end up buying over here for 40K to then ride it down all the way to 16K. Same is true over here, right? Another spike in realized losses, another spike over here. It's not necessarily the bottom of the market. The top of the market happens when realized profit spikes. The bottom of the market does not happen when realized loss spikes. The bottom of the market instead happens when long-term holders are in aggregate in losses, independent of whether they are realized or unrealized. This here is simply a comparison of the average cost basis of long-term holders to the current price. And so this is, I believe, the learning of this cycle. We do not have to see peak excitement for the price of Bitcoin to peak. What we've got over here is how much of Bitcoin is in the short-term holders. So how much percent of Bitcoin supply is in the hands of wallets that move their Bitcoin within 6 months or less? And this was a very good indicator to sell at the beginning of 2018 when Bitcoin was at 20K. It was also a very good indicator to sell at the beginning of 2021 when Bitcoin was in the 40 to 60K range. It was not that great of an indicator to sell at 72, 73k. Again, we didn't peak here. It was not the short-term holders that were taking over. It was simply just long-term holders realizing profit. And so maybe we see something similar to 2019, right? Where we dropped from 13k all the way down to 5k. So more than a 50% crash. Maybe we move again from more than 70k to maybe 35k and below. I don't have a crystal ball either, but I do believe it's important to be at least prepared for that. If you get completely destroyed in your wealth, if Bitcoin was now at 35k, because you're so heavily into altcoins and you don't own any stocks, you don't own any bonds, you don't own any gold, you simply just have very high risk cryptocurrencies and you couldn't stomach a drop like this, then maybe it's time to diversify to a degree. This might not be as important if your wealth is only 2 or 3 months of your income, because then you can simply just save with your income and buy the bottom and you can recoup the losses very quickly. But if you've got 2, 3, 4 years of your income already in investments and you're mainly in high risk crypto, then I do believe it's time to have something that's not as highly correlated. Again, I believe it's important to be prepared for any potential scenario, and we have seen that momentum is dying down to a degree. I try to keep it real on this channel. I don't just always push up crypto, say we are going to the moon. If you appreciate this, feel free to give this a like. It helps the channel grow. Again, if you're not yet subscribed, feel free to do so as well. I publish videos regularly on this channel. If you've got Telegram, feel free to join us. The link is down below. Looking very much forward to chatting with you.